Hello, everybody. Welcome back to the Entrepreneur Hour. I'm your host, Miguel Sanchez, and in my ever growing quest for financial freedom, I invite you to come along for the ride with me to learn how to be financially free, and hopefully, one day, me and you and me, can be financially free. So, today I am looking at the revenue stream of stocks. Stock market has always been something I've known makes people rich, but I didn't really understand. They don't really teach you that stuff where I come from. But over time, you kind of see that the people that make all the money in this world are either real estate or stock investors. So I've been looking since the pandemic. Again, why? Because I think everything's going to go down right now. So it's good to try all these different revenue streams and see which ones make the most sense to be involved in. So today, I'm going to talk to you about what I've been seeing with the stock market. I'll start out by saying, I did a video about equity like a week ago, I think, and a lot of people have been hitting me up about that one. And stock is pretty much one of the main ways of getting equity fast, right? You can, by using the links in the description right now, sign up. You'll get something for whichever link you choose. Right now, the M1 Finance is running a special. They'll give you $20 if you sign up by, I think it ends next week. But all of them give you money, right? Each one will give you money. So you might as well sign up to all of them, get that money, and then put in a few bucks and invest, right? Because what happens when you invest in a stock is you are buying equity in that company. So if you use something, I'm trying to teach my kids this too right now, because I wish my parents were able to teach it to me. They were not taught, so they weren't able to teach it to me. But when you own equity in things, that is the way to create financial freedom. That's it. That's the number one way, right? So stock is one of the easiest ways because you just need money. Of course, you have to have money, and that's probably why growing up as a kid, my parents didn't have stock, right? But when you look at a company, basically you're saying, I believe in this company enough to own part of it. Of course, you're going to own a very small part of it, depending on how much money you put in. Unless you're Warren Buffett, you're not going to own a substantial amount of equity in these companies. But you can do a few things by owning equity in these companies, right? So what I've been learning, and I've known about this, you hear about it, but you don't pay attention, right? There's people that live off their stock portfolio, right? And if you don't understand how that works, I didn't, and it's called dividends, right? So you can invest in stocks that give you what's called dividends. What dividends do, though, is dividends give you a return based on how many stocks you bought in that company. They give you a certain percent every quarter, I believe. I still don't even know how it fully works, to be honest. I think every quarter they give you a payout. So, for instance, I started out on Cash App because I thought you had to have a broker to invest in stocks. I'm talking about not even 2 years ago I thought this, right? And I'm in the technology world. I knew all these apps. I knew about Robinhood. I knew about all these stuff, but I just said, you know what? I don't know about that. That's where people get robbed. That's what I thought, right? I thought it's an insider information game that if you don't have that information, you're just going to get robbed. They're just going to take your money. So that was my kind of anti-stock market mentality, which is stupid to think like all these people are getting rich and not research it yourself, right? So that's what I really love doing. I like figuring things out, right? So when I come across all these different revenue streams, I'm like, all right, why not figure every single revenue stream out and then figure out what makes sense to do? So when you look at the stock market, though, I've been really researching the stock market, especially now because a crash is coming. I was told like a few months before the last one that this was coming, right, by a stock guy. He doesn't want to be on the show, though, because he doesn't want to tell me the stuff he tells me not in person anymore, but he doesn't want to say it publicly. Again, insider information, right? I happen to know a guy who's a brown guy like me that's like, hey, this is about to happen, be ready, right? And I'm like, all right. And he was right on target, right? And he told me it's going to happen again and worse. He hasn't told me like what area, but he definitely said around now it's going to get worse. Like the stocks are going to come down a lot. And it's probably if Trump loses, definitely what happens is the rich people around America that feel like the tax laws and all the benefits Trump has given businesses are going to go away. They're gonna pull their money out, and that pretty much lowers the stock market. So what I've learned is I've seen people that in 5 to 10 years have created dividend income enough to cover a good portion of their bills, right? Not as much as I've seen with real estate though, right? Again, I'm studying all these revenue streams, so I'm seeing people that take 10 years and just invest in real estate, people that take 10 years and just invest in stock, people that take 10 years and invest in their business, whether it's a regular sell your time kind of business like mass ideation is, or a technology startup that has a chance to be sold for millions, if not billions, cryptocurrency. There's different revenue streams that I'm looking at based on people devote 10 years to them and how do their portfolios and their revenue stream look in 10 years. So far, I'll tell you, the best one that I've seen is real estate, but the second one that I keep hearing is stock, right? So I said, all right, I need to dive in and understand stock more. So I started playing around with Cash App. And because Cash App, I've had people that I've paid that way. I had the app already. And I really didn't even know that you could buy like $5 of a stock. I didn't know that, right? I thought you had to buy the full. If Apple's trading at $400, you have to pay $400. So I said, all right, you know what? Last year around, I want to say maybe the summer, I was like, you know what? I really believe in the Tesla idea. I think Elon Musk is gonna do it. I think if anybody's gonna do it, he's the closest one, and he has the mind and the resources to do it. So I said, you know what? I'm gonna put $150 on Cash App. That $150 made me 280, I think now. So I made 280 on 150 from last year. Of course, that's not all the time, right? That's not what all stocks do. I happened to catch it. Imagine if I would have put $15,000 or $1,500, right? So that's where stock. There's multiple ways you could look at investing in stock, right? So again, I'm looking on the Facebook too. If anybody's asking questions, I'm on it. All right. Let me make sure I'm on to catch it. Imagine if I would have put. Whoops. Sorry. It's a little delay, but all right. So now I'm on the Facebook. If anybody's asking questions, so actually I was on the wrong one. All right. Sorry. Because follow me on my Facebook fan page. If you don't know me personally and you're not a Facebook friend, one day we will be friends. But for right now, follow me on my Facebook fan page. That's where I can really see the comments, and YouTube, of course. But right now, I'm talking to my friends on Facebook. If anybody has any comments. So basically, there's two ways you can look at stock investment, right? Right now, I say hold out for the crash if you are the type that can't see yourself putting money in stock and just letting it ride for like 20 years. Because that's the two types of stock traders, right? Actually there's three that I've seen so far. There's ones that buy and hold. That's like the Warren Buffett model, where you have a stock, it's going to grow in value. So for instance, I talk about this every time I think of stocks. I heard two things. One was that if you had invested the price of the iPod the day it came out, it was $400. If you invested that $400 into Apple stock that day, you would have $60,000 right now of value in Apple stock. So what does that mean? iPod came out maybe 20 years ago. You put $500 into Apple. 20 years later, it becomes 60,000. That's one way. And plus, along that whole time, they were giving you dividends off that $500. I don't know how many stock that would have been at that time, so I'm not sure how much dividends you would get. But on top of it growing in value that much percent, you also have dividends. So by buying a stock like Apple, you are saying, I believe in that company, and I believe in 20 years they're going to do amazing things, so I'm going to leave that money in. If you take that line of thinking where you say, I'm just investing to grow the value of that stock, and if they give dividends, awesome. So Apple is one of those stocks. I believe Apple, Microsoft are those type of stocks. So I'm going to tell you something I just saw. I invested about the same amount in Apple and Microsoft because I'm not, like I said, I'm not investing thousands. I'm investing like 100 here, 50, 20, whatever I think. So I invested, I think, the same amount in Apple and in Microsoft. And Microsoft gives a higher dividend. I don't know why. I guess what I've heard in researching is dividends are paid by companies that are profiting, so they share their profits with their stock investors. But certain companies spend a lot of money on innovation, so they profit less. So Apple is one of those companies, right? They're coming out with things all the time. They're working on the next big thing, which takes a lot of money to invest in internally. So when you see Apple, which is one of the top, I think the top companies in the world value-wise, and their profits are insane on stuff like the phone, the computer, they take a lot of that profit and they invest it back in the company. So that brings me to another company that did that, Amazon, right? Amazon didn't profit for, I think, the first 20 years or something like that. It just started showing profit because they took all the money they were making and they were reinvesting it in the company. So they weren't giving dividends. I don't even think right now they give dividends because they're growing. They're constantly innovating. But the value of that stock, I think, I got to look it up and somebody correct me if I'm wrong. I think they said if you invested 10 years ago $1,000 in Amazon stock, right now you'll have $1 million. It's either 10 or 20. I mean, that's a big difference. 10, 20 years is a big difference. But still, if you gave $1,000, that 1,000 would be worth $1 million. You didn't get any dividends, but that value of that stock is worth $1 million now, and you can keep it and keep going, right? And then the day you want to retire, you say, all right, I'm selling all my stocks. You take it out, and now you got to pay taxes and all that. But the value of having that in the stock market versus having it in the bank, very different. So, for instance, another thing I researched was if you keep your money in the bank, they may give you 1% interest, if that, right? But every year, inflation is about 3 to 4%. Inflation means the value of the dollar goes down 3 to 4%. So what do rich people do? Why do rich people get rich? They keep their money out of cash. And how do they do it? They invest in real estate. They invest in stock. So stock is companies that are already public, right? So, but you can invest in technology startups and buy stock in technology startups like Amazon. Imagine if you knew Bezos before it went public and you gave him $1,000 then before it went public. Because I'm talking about if you gave Bezos and Amazon $1,000 10 or 20 years ago, however long it was, it became $1 million now. Imagine if you gave it to him before it even went public. That $1,000 maybe turns into $1 billion. Who knows? It's worth $1 trillion right now, right? So this is where, as the tech startup kind of guy, I always knew buying stock in technology startups was valuable if they hit, but it's a high risk, high reward thing. So these investors, they know they're gonna miss out on 97% of the startups, but the 3% that do hit, they make billions, and it makes up for all the losses, right? So that was the only thing I knew about, and that's where I was sending my revenue generating targets, right? By saying, okay, I'm gonna be involved in one of these startups that explodes one day as early as possible, because I know the stuff I know. I hope I can figure out which ones are gonna do that. Of course, high risk, high reward. How much risk? I've been finding out by really starting to be around investors of technology startups. The real risk of technology startups is it's massive. I would say the odds of most startups working out is very slim to none. But if they do work out, on average, it takes 7 to 10 years for an investor to make their money back without making any money for the whole way, right? So here's an example. Let's say I come up with a hot new startup. Investor gives me $1 million. That investor expects to make 40 to 50 times the money they gave me in 7 to 10 years. So remember what I said, 40 to 50 times their money because they got in early. But if you invest in a stock, like let's say I'm going to take the life of that journey of that company. I create this company. I take investors' money. I take $1 million in investors' money early. They expect 50 times their money back. So what does that mean? They expect $50 million back, right? How much money do I have to create for them to be able to get $50 million and it not affect the company? A lot, right? So what needs to happen is your company needs to double in value every year for 7 years to be on pace to pay that person $50 million back in 7 to 10 years. So that's like, how many companies do that? Double in value every year for 7 years. That's very, very tough. But it happens, right? So that's what they do. They look at which company has the best chance of doubling every year for 7 years. That's what they invest in, and that's where you see venture capitalists, right? Venture capitalists are buying stock, but they're not buying it on the public market. They're buying it before it's public because that's where they can get the best bang for their buck. They get the most value and the most upside, but they take the most risk. So let's say this is how they make their 50 million. Let's say year 7, 10, we've doubled in value, and now we're worth. Look at the like right now they're saying Airbnb is about to go public, I think for like $30 billion, and that's supposed to be low. Think about that. So this company got in when it was worth nothing. This investor, they gave $1 million. They may have taken 20%, up to 20% of that company's value at that time. By the time they got onto public, they may have taken more. So let's say they stayed with 5% of the company, and now it goes public, and it's worth $30 billion. 5% of $30 billion is more than $50 million, right? So that's where stock becomes available to us, right? So like when Airbnb goes public and it's worth $30 billion on the public market, and we buy, let's say the stock is worth, I don't even know what it's going to be worth, but let's say it's $50, make a number, and we give $100. Now we buy 2 shares of that stock for $100. That venture capitalist, when they invested in early, they bought millions of shares for $1 million, and they still paid less per share than you. And then when it goes public, they buy a lot of it, they sell a lot of those shares to you as a public, and that's where they take their money back. So maybe they'll keep, instead of selling all their shares, they'll sell 100 million worth of shares, and then they keep the rest in the company. Like that's what they do with Amazon. That's what they do with companies like Amazon. Then we, as public people, are saying, okay, now we'll get in the game. So this is all to explain the whole life of stock, right? And I mean, I'm just learning this as a 41-year-old. I wish they would teach this in school. And that's what we're working on in Meta Bronx and things like that. We need to understand this as young as possible. We need to teach it to our kids, because right now we're taught to use our buying power. And as minorities, we spend the most. Our buying power is very strong. That's why they say, when this civil unrest is happening, use your buying power, because that's how they'll listen to us. But if we used our buying power to invest in stock of companies, early stage and later stage, I believe that that's a more powerful use of our money, right? And then it also gives us better upside, because I've been telling my kids this. They want to spend money on this, on that, and I'm like, all right, if you're going to spend money like the Apple idea, if you're about to buy a PlayStation, you're going to have to give at least the same amount of that PlayStation in investing in Sony. So, all right, the PlayStation is coming out. It's $500. So the next $500 you get for your birthday, Christmas, you're going to invest it in Sony, right? Because if you invest in Sony now, in 20 years, that $500 could be $60,000. Who knows? But you got to start understanding that rich people don't spend and then invest. They invest, then they spend, right? So because they understand it's better to have equity in something than just own a thing that it's going to be, most people don't even know where that first iPod is right now. That thing is worth $60,000 right now, because if they would have put that $500 in a stock, it would be worth a lot more. So that's kind of where I'm like, all right, today I wanted to do a show about stocks, because I did hear one of my friends on the Facebook chat put in, I want to learn about stock. So I said, all right, you know what? Let's do it. So I started using the apps in the description. I've been using the apps in the description, and I'll show you. I can't really show you Cash App. I gotta learn how to take stuff off my phone and show it on the thing. But I could show you. I signed up for M1 Finance, for Robinhood, and for Acorns. I've only put money into M1 Finance because I like the way M1 Finance, I just like the interface, and I like the way it does it. Basically, it makes a pie chart, and it shows you what percentage you're investing in what, and then you could also share that. So for instance, I saw a video of a YouTuber that's really into stock, that's trying to get to a point where his whole life is lived off the dividends of his stock portfolio. So I watched it, and then he said, and I'm going to give you the link to my portfolio. You could copy the same thing I do. And I was like, wow, that's pretty interesting. So he did it, and I looked, and I was like, okay, now I understand what type of stocks he thinks he needs to invest in to get. He has to spend, he did the math. He has to spend $1.3 million a year. I mean, $1.3 million to make $40,000 a year in dividends. So I was like, that sounds crazy, right? If you think about it, you gotta give $1 million over your whole 10, 20 year, whatever it is, to make $40,000 a year. The thing is, when you give that million, it doesn't only give $1 million. That million grows. So like I just told you, in 20 years, if let's say he put $10,000 instead of $1,000 into Amazon, the Amazon of the time. Instead of having $1 million, he has $10 million. So the money compounds. So it's a little bit different than just thinking, I got to put $1 million into this and it's going to be worth $1 million. If you put $1 million into stocks over 10, 20 years, it's going to be worth a lot more than that $1 million. Plus, you're going to get dividends. So if you put $1.3 million over, that's actually putting $1 million of actual dollars into the stock market over 10, 20 years, that could be worth $10 million, plus you're getting the dividends. So he might be really, in 20 years, making $250,000 off of his $1.3 million investment. So that's the reason why, that's how rich people do it. They put their money in, and over 20, 30 years, they have an accumulation of wealth because it compounds. It keeps investing, it keeps reinvesting, and it grows the value, and then you keep buying more stocks and you keep getting more dividends. And then what happens is, like they say, Warren Buffett didn't make most of his money till after 60 years old because of that. His stocks were just multiplying his dividends, and he was just throwing it back in, and then it just became billions and billions and billions. Of course, we're not Warren Buffett, and that's not what's going to happen to most of us, but on a smaller scale, it can. So for me, I'm thinking, I don't have a lot of money in the stock market at all. I don't even have $5,000 in the stock market, not even close. I have maybe a few thousand. I don't even know. I gotta look. I put a little bit in each app just to learn, because I know the stock market is gonna crash. They're telling me the stock market is gonna crash. So I'm like, I'm not gonna learn right now while it's artificially high, which is what's happening right now. A lot of people are growing their stock portfolio. It looks good, but it's fake, because the Federal Reserve and the U.S. economy, they're dumping money into the stock market to make it look better. That's why my friend is saying that it's going to crash, because it's artificial. And once they pull the string out and show that, it's going to go down, and they're probably going to time it with if Trump gets it out of the office. If he doesn't, maybe it still stays up with the artificialness, and it'll happen once he really leaves office next one, right? Next election. So that's where it's like, should you be trying to put money into the stock market right now? They say it's always a good time. So I've been listening to a book by Tony Robbins. It's called Money Master the Game. He says the stock market has never took money from someone. It's only taking money from people who couldn't wait, right? So it's always going to grow in value. If you believe, people like him say, if you believe in America, the stock market will grow, because America will make sure the stock market grows. But in timelines that make sense. You're not going to put money in Tesla today, or Tesla was a bad example because it actually did raise really fast. But you can't put money in a stock today and expect in a year to make 10 times your money. That's not going to happen. But if this year it goes down, next year it comes up a very little, the next year it goes down, the next year it comes up a little bit more, over time it will go up. But if you're trying to time the market, what I've heard is good luck. Only the top billionaires know how to do that, and that's why they're top billionaires. That's where I always thought this is a game for just the super rich, because I always thought they know stuff we don't know, and we put our money in, we lose it, because I was thinking people are trying to take it out. They're trying to time the market. I've only ever thought of stock market as timing the market. But I didn't realize something, that I was using the stock market with stuff like 401k and all that, which you know, okay, they're putting it in mutual funds. That stock market, but I mean, I didn't really fully understand what that meant. I just said, all right, put the money in there. They say that's the way you retire. Okay. But I didn't really understand. So actually checking out that book by Tony Robbins, the Money Master the Game. Basically, when you put money in your 401k, there's a company that manages it. What they're doing is they are putting it into stocks for you at the best way they know, right? Because when they grow your value, they make more money. What happens though is, by giving them even 1% a year, some companies say 2-3%. He says even by giving 1% of your 401k to a management company means at the end of your 401k, when it's time to retire, you will end up with half of what you would have had, because you've given half in fees to the company managing your stock portfolio. Basically, that's what you're doing right now. When you have a 401k, you're allowing another person or group of people to manage your stocks. That's pretty much what's happening. So I was like, okay, so either way, you're in the stock market whether you think it or not, pretty much, right? So now I'm talking to myself really. Now I gotta like understand this, because if I'm gonna have a 401k and stock is one of the main ways people create wealth, I gotta understand it, right? So all of this is me starting to say, oh, okay, I've been in one form of stock, which is the high risk, the most riskiest one, pretty much my whole career. I'm trying to get lucky on a stock, being involved in an early stage startup. I'm trying to find the Amazon and own 1 million shares of it when I can get the shares for $1, because then when it goes public, the shares are worth $50. Now I'm rich. That was kind of what I've always thought. And I've been in that world, because I said, all right, I understand technology. I understand technology trends. If I catch the right one, I should be good. But I never really understood the back part of it once it goes public. And I definitely didn't understand that I'm already in the stock market because I'm giving some company my 401k. Actually, I did a Roth or SEP IRA. I forget. I don't even know the name of it. I just know as an entrepreneur, they say you could give 25% of your income a year to a Roth, SEP, IRA, I forget which one, and that is a tax deduction. So like let's say you make $100,000 a year, right? And it comes tax time, and they're gonna tax you at the rate of $100,000 a year, and you put $25,000 into a Roth or SEP IRA. I think it's SEP. I don't know. So you put it into the SEP IRA or Roth IRA. Look into that, because Roth IRA, after 5 years, you don't pay taxes. So if you put money in a Roth IRA 5 years later, whatever money you take out, you don't pay taxes on it. So that's a good thing to do, right? So I don't know about SEP IRA though. I gotta look into that, because I have one for sure, right? So again, so you got 100,000. They're about to tax you at the 100,000 rate. I don't know exactly the rates, but if you give 25,000 to your SEP or Roth IRA, now you only made 75,000, so you're taxed at that rate. So that's why it's a multiple benefit. Not only do you take the money, put it somewhere where it's going to grow and compound over years and years and years, but you pay less taxes that year. Of course, you got to have 25,000 to give, but it's up to 25,000. You don't have to give 25,000. You can even give 1, 2, 500, whatever you can give, and it starts to put you in that way of. But right now, I have someone else managing that for years, for at least 10 years now. So I need to go look at that and say, all right, how do I fix this? How do I manage it instead of them, and not give them 1 to 2%? So I'm like, all right, but when I manage it, what the hell am I going to do? I know nothing about stocks. So I'm looking at, what do people do? So what I will do is I would put it in systems like these people are doing, where they grow their thing, but it also maybe gives dividends. And instead of taking the dividends for myself and trying to pay my bill, I'll just reinvest it, right? So that's where I am with me trying to figure out this whole stock market thing. I'm trying to understand, first of all, the overall, what does it mean? How does it work? And then I'm trying to understand, where's my current investment in it, because I am invested in it. I didn't even really fully realize how much. And I'm also investing in Cash App, M1 Finance, Acorn. But I'm like, I need a system of how I'm doing this. Why I have all these apps. Why I have an IRA. Why I need to have a plan, right? So right now, what I am doing is I am looking at it from an overall. If I say 100% of my investable money, what should I do with it? I'm saying, okay, I'm looking at all the revenue streams, right? There's a bunch, many, many, many. I'm saying, okay, mass ideation is my main revenue stream. I own it 100%. So I can do whatever I want with the profits. I can do whatever I want with it. So first thing is making sure I'm keeping the value of that, at the very least, able to pay my bills. Because that is my dividend, really. Like, mass ideation pays my bills, because I work at it and it pays me profit and a salary, right? So, but only a salary if I got projects, right? So there has to be something in place, a system in place, to make sure mass ideation is paying my bills. But that's work in itself. But I could also use mass ideation to invest in stock too. You can invest, companies can invest their money too. So that's where I can double win if I do it right. And this is what I'm learning. There's multiple, and this is where stock. So right now I own 100% of the stock in mass ideation. That means I can do what I want. I have most of all the voting shares, all that, right? So what I can do is I can say, okay, we're going to invest in innovation, because that's, if you're not investing in innovation as a company right now, you're going to go out of business 1,000%, right? So part of what I'm doing with mass ideation is I'm saying, okay, this is not really a stock conversation, but I think it's a good conversation to understand the value of stock, because companies, when you look at a company to invest in it, you have to understand how they're spending their money, right? Because that's how you know, is it going to be a company that does well? So that's what the people do. There's a form you see where because once you go public, all that information is public. So I can look at the books of Amazon and see, Okay, I can see how much they're paying staff. I can see how much they're spending on rent. I can see how much they're profiting, right? So for me, the first place to look is my own company. How do I do it? How do I want to do it? Do I ever want to go public? Do you know a lot of the companies that are public right now, they were 30 years before they even went public? They've changed multiple times. GE, companies like GE, if you look up their history, those companies are hundreds of years. They're like 100 years old, GE. When they first started, they were like an appliance retail store. And now they're the GE that we know that is innovating and all that stuff. So you could take a company and you can make it from nothing to something huge. So mass ideation, it was closer to nothing to something huge, right? But it's been paying my bills for 10 years. So, right? So I look at it and I say, okay, how am I going to spend the money in mass ideation? Of course, I got to pay my bills. Of course, I got to pay the people working on projects, whether they're full-time, freelance. I have been a remote office for 6 years already. Like, I've been working 100% remote with people all over. I have offices that I can use and I use whenever I have to, but I don't feel like mass ideation is the type of company. If it's going to be an innovation company, I'm not going to be an old school business model. So even before the pandemic, I knew companies were going to be full remote one day, and mine was definitely doing it. So I don't have to spend on rent. My rent is, instead of spending on a physical location, I spend it on digital space, servers, innovation. So when I say innovation, what do I mean? Because this is a big thing when it comes to stock. If you're going to buy a stock and hope in 20 years it's going to be worth $1 million when you put in 1,000, it's because that company is innovating. Amazon started out selling books online. That's it. Just books. Now, Netflix is hosted on Amazon servers, and most of the internet is hosted on Amazon servers because they innovated. They said, all right, books, sure, we're doing good with books, but we just made $10 million. Instead of just pocketing that $10 million, let's see what is the biggest risk to our business, to our business model. What is the future of the internet? Let's take that $10 million and invest it a little bit in all those things and see what hits. And they hit big on a lot of things. And they're still doing it. So innovation is a big part of how I'm looking at the stock market. I say I'm not investing in something unless it's an innovative company. That's why I invested in Tesla. When I did, I said, that guy knows innovation. He's trying to go to space. He's creating a train that goes from New York to LA, whatever. He's doing all this innovation. I'm going to invest in companies that have innovative founders. That's my stock portfolio. Again, though, I am in no way a financial advisor. So you want to take my advice, take it. I'm not really even giving much advice, really. I'm telling you what I'm doing. And I don't even really right now, I'm still trying to learn. Before I even get advice, I try to understand enough to ask the right questions, right? Because if you're getting advice, but you don't even know what to ask, what advice is that? You know, so for me, my first thing is to say, all right, let me fully understand this stock market thing in and out. And then I'll go to my network and say, all right, I notice XYZ. Is there a reason this is happening? And should I be? And they're like, yes, actually, because X, Y, and Z, right? So that's a different conversation than, hey, what should I invest in? You know what I'm saying? Like that's a big difference. And if you do that, you see people do that. People do that to me. And I'm like, dude, I have no clue. I don't know. You know, but if you do that to somebody that knows, it's that question is so like nuanced. You know what I mean? Like, how do you really know how to answer that? Are you planning for your retirement? Are you just trying to flip money really quickly? Are you trying to get dividends, right? There's a bunch of things. There's even more than that. So, first place I start is my own company, Mass Ideation. I own 100% shares of that. I own all the equity in that. What do I want to do with it? How am I going to innovate so it grows, right? So I say, okay, I want a certain percentage, and I'm figuring this out myself right now still. I want a certain percentage of whatever Mass Ideation makes to go to innovation. I want a certain percent of the profit to, of course, go in my pocket. And I want a certain percent of the profit to go into the stock market, because my pocket is one thing, but like I said, with the 500 that turns into 60,000, or the 1,000 that turns into a million, it going in my pocket ain't gonna do that, right? Like, unless I luck out, right, on another company, but that's another company where I have to buy stock in or earn stock in, right? So that's the thing with stock. You can buy it or you can earn it. The way you earn it is usually by being an early person in the company. That's, again, was my plan, right? I'm going to be an early person in the next big startup that comes out of the hood, right? That was my plan. I created MetaBronx to find it, and that's what we're doing. But that's a long-term plan, right? It could take 20, 30 years to find that company, and then it could take 10 to 30 years for it to do that, right? Amazon started in the 90s. That's another thing you don't realize. Like, these things take time. So if you're going into the stock market to look to flip $1,000 to 10, good luck. You could do it, but most people can't. It's really like less than 1%ers do that. There's like 10 people in the world that do that, right? And they run the big hedge funds, because that's what hedge funds are. Hedge funds buy stock and different things, and they know how to make the money off timing the market. For people like me, and probably you watching this, I right now am taking the approach of, I'm going to time the stock market in the way of when it crashes. First of all, I have to have money for my bills for the stock, to ride out that crash, right? Because they're saying when that crash hits, it's going to be worse than the Great Depression. Right now, they're already saying it's worse than the Great Depression, and that crash hasn't even happened. So, first thing everybody has to do, I don't care, before you invest in anything, is make sure you have an emergency fund. That's the only advice I can really give you. Have an emergency fund, right? Before you're putting money into anything, have an emergency fund, because it could be 2 years where the economy goes bad and your job fires you or whatever it is, your company not doing as good. So one thing is, have as much of an emergency fund as you want, as you think is safe. 2 years is kind of unrealistic, I know. So, emergency fund. I'm the type, and this is just me, I'm the type to know that I can thrive in a bad economy, so I don't feel like I need a huge emergency fund. I feel like I light up when the economy gets bad. My hustle gene kicks in, and I do better during bad economies, because this is when the opportunities arise, and I'm willing to work for them, and I'm willing to figure them out. So for me personally, I'm not as worried about having a 2-year. I will sell oranges in the street if I had to, right? I won't have to, but if I did, that's what I would do. So for me, I'm not as safe oriented, if that's a word. So for you though, I would say, if you are, that's another thing about the stock. You have to understand yourself, because if you're going to be looking at that stock every day and being like, oh my God, it's down 5%, I just lost $1,000, let me sell it. It's probably not going to be the right thing, the right revenue stream for you. Real estate might be better for you, because if you're going to worry every time it dips, you're going to be in a bad spot. But like Tony Robbins said, it's always going to come back if you're willing to wait it out. So that's kind of where I'm at. I'm definitely my timeline for things is till I die. I don't care about money as much as most people. Like I just want to live the life I want to live, and it's not gonna cost me a lot to do it. So all right, nope. All right, so I'm blowing up because I'm getting spam already. That's pretty awesome. All right, so no questions so far. If anybody has any questions, hit me up. But basically, my game plan is, I want to wait till the stock market crashes and then start buying stock. Like right now, I've already put in $10, $20, $100 here, there. I'm going to leave that. I'm not going to sell it, even though, like I said, I think I almost doubled the money from Tesla, right? Which is not a lot, but I could have took that out and be like, thanks, you know. But another thing you need to understand is, if you take stock out in less than a year, you pay more tax. So if you're going to buy stock to sell it within a year, you're going to pay taxes on it a lot. I think it's the highest tax rate of any stock thing is if you sell it before a year. So if you put money in a stock, understand that you got to have like at least a year. You're not going to need that money back, or you're going to pay a ton of tax. I don't even know the full amount because I don't plan to sell it. The dividends, though, I wonder if you pay tax on dividends. I mean, I haven't even got 25 cents of dividends yet, so I doubt I'm going to have a problem. But I wonder if you get to a point where you're making $100,000 a year in dividends, do they tax you on that? It's a good question. Does anybody know that? If anybody knows that, put that in the chat. So my goal is, of course, have different revenue streams. So one is, if I can get to the point where, this is my goal. This is my true goal. I just want 7 revenue streams that pay me $30,000 a year. I think I can live a decent life of $210,000 a year, right? I think so. So 7 revenue streams that make $30,000 a year means $50 a day, right? I think, no, $100 a day. $100 a day, about $100 a day. That's how I was looking at it. I want 7 things that pay me $100 a day. So to get to $100 a day, it's about $36,000, whatever. Let's round it down to 30. That means you probably have to invest about $1 million, like that guy said, right? You have to invest up to $1 million over 10, 20, 30 years, 10, 20 years, something like that, to get to making $30,000 a year in dividends. Okay, so now you got to put in money. So in 20 years, to invest $1 million, you got to divide that up, and I think it's like $5,000 a month, right? So that's tough. That's tough to do, right? So to pay your bills, plus have an extra $5,000 to put into the stock and wait 10, 20 years giving $5,000 a month. That's tough. So I don't know if that's my plan. I know I'm not going to put $1 million in. I'm going to put in whatever I think I can over time till I get to 30,000, right? Of course, I have mass ideation. Mass ideation definitely has to pay me more than 30,000 because my bills cost more than 30,000, right? So that's 2 revenue streams I'm working towards, right? Stock in other startups too is another way I'm doing it, right? I'm working on different startups. But stock is key. Stock is even key in real estate. Stock, when you buy a property, you're buying the 100% stock in it, right? If you have partners, you have, depending on how much you own versus them, you own a certain percent of stock in that real estate. So what I've been looking at too is equity crowdfunding. Equity crowdfunding is you buying stock in a company early, right? So what's happening? You see a startup early. You believe that thing can last 20 years and has the right team, and I think it's a good idea. You can buy that stock much earlier than even before it goes public, and then if it ever does go public, you explode that. It explodes. So they're doing that for real estate, and they're doing it for startups. So I'm diving into that into that revenue stream for real estate and startups. 2 things that I'm interested in, because what did we say here? The way people get rich: real estate, stock. So if you can buy stock in real estate and technology startups earlier than normal, of course you're taking a higher risk. So this is where you got to take the whole amount of investable income you're willing to invest and say, okay, how much of it do I want to spend on safe things? How much do I want to spend on risky things? So depending on how risky of a person how much of a stress-free type of person you are, that percentage should be different, right? For me, like I said, I'm pretty laid back and stress-free most of the time. Many things, especially if you're an entrepreneur, right? In multiple places, different companies, you have to be able to deal with stress. And then it's my timeline. What's your timeline? My timeline is also longer than most. I'm not trying to retire. I'm not going to retire. 67. Most people don't die till 80 something now. I think it's like 80. So you're going to retire at 67, 13 years. I'd rather live a life where I'm making money enjoying what I do till I die than retire and spend 13 years enjoying life. That's my goal. So I'm not retiring. I don't care. The last day I die, I'm gonna probably be on a phone call like, oh yeah, Miguel died right after that phone call, or after his show, because I'm definitely gonna do the show. The day I die, I'll have a show out. So basically, my timeline is different. That's why, again, you can't really ask people, hey, what should I invest in? It depends on your scenario. So what scenario is that? How much money do you have? Do you have a backup savings plan already, a emergency plan? How much are you willing to invest a month? Are you willing to wait 10 years, 20 years, 30 years to reap that reward? Or do you want the money back in 5? Are you trying to time the market? Or are you trying to live off that income way down the line? So for me, again, I'm just trying to fully understand it before I really dive in. And of course, there's people with hundreds and hundreds of thousands of dollars in the stock market. And I have one guy who's an investor, friend of mine. Actually, he's been on the show. I won't say exactly who he is. But he says, I would not have any money in the stock market right now at all. Zero. And he doesn't. He's an investor. He's rich. He doesn't have any money in the stock market. But he has a shorter timeline. He's older. So his timeline is very different. So he cashed out. He cashed out before the stock crashes, right? But if you are my age, younger, a little bit older, you might want to wait 30 years. So it's not gonna crash and never come back. They're saying it's gonna crash and it's gonna take longer than normal to come back. People are saying maybe 10 years to come back. But if you're not gonna retire in 10 years, you could ride that out unless you need the money and you need to take that out. Again, not having an emergency plan or not willing to hustle during a bad economy. But hustle might not even be an option. Like in the Great Depression, there was no jobs. It wasn't about hustle. You could hustle all you want, but only a certain amount of people had jobs. So for me, it's another reason why I'm exploring all not seven revenue streams, way more than 7. But they say millionaires have 7 streams of income. So I said, all right, 7 streams of income. That's what I'm looking for. But stock tends to be one of them. For most people, like, again, I study rich people now, and I'm like, all right, what are your revenue streams? Boom, boom. All of them have stock. All of them have real estate. Very few of them have tech startups with success so far. Some do, though. When they're successful, they're really freaking successful. So for me, since my game plan is a longer timeline, I'm willing to take the super long-term risk reward on the tech startup. But I'm also starting to diversify more because as a 40-year-old, you want to have some safety net, right? What if I just do technology startups the whole life and nothing pans out, right? Of course, I'll pay my bills, but it won't be, a big payoff anytime. So for me, again, if I have to like recap the thinking of this video, right? If I were you, and of course you have any questions, definitely hit me up on the comments or wherever. But if I were you, I'd be looking at how do I start to learn about the stock market? And first place to start is your 401k if you have one. If you don't have one, start looking at those IRAs, Roth, whatever it is, because those are a good place to start because you don't know about the stock, but the people managing it, even though you're giving them that percentage point that takes away the money at the end, is still better than having nothing, right? Like, and then starting to educate yourself, even if you have that, if you have a 401k, especially from listening to this Tony Robbins book, it could cost you half of your retirement fund. He was talking about stories where people thought they were going to retire with $1 million and they retired with $500,000 because they had this company managing their portfolio and taking a percent, and that it builds over time and you're just losing money without even knowing it. So I think every person in America that works a job should understand stock. So the way I would start to do it is, of course, right now they're running promotions with all these in my link. If you sign up, I get $5, you get $5. You get $20, I get $20. So one the M1 Finance, I think it ends in a few days. So sign up, get $20. I get $20, you get $20. But you have to put in money to invest, right? So where should you invest first? Right now, I think the way to get your feet wet in this world is not to buy full shares of any specific company. Start to look, this is what I did. Start to look at, if I was going to buy this company, buy into this company, what would I care about? What do I think is going to be around in 20 years? What do I think is the real big winner that people don't really understand? Because I understand technology. I'm only really investing in technology. Another big thing that I've been really fighting with is there's certain things that make a lot of money but are not good for this world, right? Energy stocks, that gas, oil. These companies are like somewhat evil, right? You can invest in them and get nice dividend, but it's like you're investing in things that are gonna screw you over later for money now, you know. So part of me is like, all right, I want to understand these funds, because I know a lot of these funds are investing in big oil, and big oil is ruining the planet, you know. So there's things like that I'm even still like, all right, I'm just gonna invest in things that I know. Technology. But even there, right? Even there, Amazon has all these servers. That puts a dent on the emissions of the world, and you know, so there's a lot of things to look into where you're like, okay, is this company good not only to make money but good for the world? In 20-30 years, are we still going to have a world where we don't got to stay inside every day because of global warming, because companies are not caring about the environment, right? So that's part of my own thing where it's like, it's not all about money, especially for me. So that's another thing, to start understanding the companies you're going to invest in. And actually, I put up an article recently, it's definitely on my Facebook and my LinkedIn, where the Silicon Valley is starting to create their own stock market, where part of it is you have to be good for the world, not only good for making money. And that's super interesting, and I'm going to watch that. And when they open, I'm going to be watching and investing $20, $100, whatever I think, because I just think it's worth putting money in and seeing what happens. And you start, because once you put money in, this is the thing about investing. Once you invest in yourself or anything, you start caring more, right? So once you take a class, if I told you this class was free, you may not even come. But if you pay $500 for this class, you're going to show up, right? So when you start putting in money, you just start caring more. So even when I first put like $20 into Tesla. And then I said, you know what? Let me look at what they're doing. I started looking, I'm like, holy crap. When they get that battery thing right, they are going to go insane, because the battery's not only going to work for cars, it's going to work for houses. So then I put another $100. And then I said, let me watch again something about Tesla. Wow, they really are going to do it. Their AI is getting better. Oh, but they killed somebody. Man, that's bad. It might work. They might close the company for something like that. But nope. That's kind of what happens with innovation. They have to try things, and of course people are going to die. Sucks. But I think that AI is going to get better now because that person died. Put another $30 in, right? Stuff like that, right? So you start to care. So what I say is, look at companies that you use. That's another big one. That's what I'm telling my kids. What do you use? What do you think kids like you are going to be using for a long time? Oh, we really like Fortnite. All right, when Fortnite, the company that owns Fortnite, goes public, you're going to invest money in it. Even though I don't think Fortnite is going to last 20 years. But the company that created Fortnite, they're not going anywhere. They power a lot of games on the internet. So it's going to be worth owning that. Unity is going to go. I just made a video about Unity, and it's one of my most popular videos, because Unity is used to create most of the games in the world, and a lot of other things that most people don't even know. Virtual reality, augmented reality, it's Unity. So of course, understand Airbnb is a big one, where I'm like, all right, I'm going to make a business around Airbnb. Maybe I should own the stock. But I've been learning about stock. And I watched a video where the guy says, you might not want to invest in Airbnb because Airbnb, when companies went public before, like the Amazons of the world, you could put 1,000 in and they grow so much that 1,000 becomes 1,000,000. But Airbnb is going to go public worth $30 billion. Is it going to go from 30 billion to 30 trillion? Who knows? So this guy was a hedge funder that said, I'm not going to invest in Airbnb. And he does Airbnbs. So that's another thing. He says, the reason why I watched him is because he said, I was a hedge funder. I invested in every type of asset class, stocks, bonds, whatever, real estate. I've never seen an opportunity right now like investing in vacation rentals, short-term rentals. And I saw that. I was like, oh, I thought the same thing. And I never was a hedge funder, but I just saw it as, never saw something like this. He said the same thing. I've never seen an opportunity like this. So that's where I said, all right, I'm diving in more because he sees it. I've seen it. I got to be involved. So like that DR property is almost done. And I'm documenting the whole process. And I'm going to try to have that guy on my show. Once it's up and running, I'm going to try to have him on my show. And then my hope is to create an equity crowdfund where we all can invest in properties together. That's my goal. We're going to see how it goes. I'm already having a lot of interest on it. And of course, what are you going to be doing? You're going to be buying stock in a company that I create where we both make money. So again, start looking at the stock market. I won't tell you to put a bunch of money in right now. I think based on what a lot of people are telling me, it's going to crash. But I still think if you have a long-term outlook, it's worth starting to learn. It's going to take a while to learn. So might as well start learning right now because when it crashes, you'll know enough to maybe put a few dollars into something that really could make you money in 10, 20, 30 years. So thanks again. If you watched this far, thank you so much. Please like the video. It helps more people watch it. And subscribe to my YouTube channel if you can, please. My Twitch channel as well if you're on Twitch. And definitely follow me on Facebook as a fan, a Facebook page. I have a Facebook Miguel Sanchez page. Miguel M. Sanchez World everywhere. I highly, highly appreciate anybody who's watched for 1 second. But if you got this far, thank you. And please let me know how I can help you. If you're watching this far, there's some way I can help you. I just don't know. I don't know what you need, but I'm sure I can help you. Thank you. Thank you for watching. Have an innovative day. Remember, and innovate every day. Thank you.